Hi, Assalamualaikum and good morning. So today I would like to show you our presentation group assignment, which is study case 3. So we go to the next slide. This is our group members. So we go to the next slide, introduction. Accounting play an important role in running a business because it helps you track income and expenses, ensure statutory compliance, and provide investor, management, and government with quantitative financial information that can be used in the making business decision. There are 5 different types of accounts: asset, liability, inquiry, revenue, and expenses. Each account type includes sub-account to record transaction details. Accounting is important as it keeps a systematic record of the organization financial information. Up-to-date record help users compare current finance information to historical data.
Alright, for journal, 10 October 2022. Cash from debit 60,000, capital from credit 60,000. 11 October 2022. Furniture from debit 10,000, furniture model from credit 10,000. 12 October 2022. Purchase from debit 50,000, cash from credit 50,000. 30 October 2022. Purchase from debit 30,000, B.Sen & Co. from credit 30,000. 40 October 2022. Bank from debit 60,000, cash from credit 60,000. 60 October 2022. Cash from debit 50,000, purchase from credit 50,000. 70 October 2022. Stationery from debit 1,000, stationery barat from credit 1,000. 80 October 2022. Sahihkan from debit 10,000, sale from credit 10,000. 90 October 2022. Machinery from debit 6,000, bank from credit 6,000. 20 October 2022. Sale return 2,000 from debit, sahihkan from credit 2,000. 21 October 2022. B.Sen & Co. from debit 5,000, bank from credit 5,000. 2022 October 2022. Drawing from debit 3,000, bank from credit 3,000. 23 October 2022. Interest from debit 2,000, bank from credit 2,000. 24 October 2022. Office expenses from debit 10,000, bank from credit 10,000. 26 October 2022. Bank from debit 5,000, sahihkan from credit 5,000. 27 October 2022. Electricity from debit 100, cash from credit 1,000. 29 October 2022. Cash from debit 6,000, sale from credit 6,000. 30 October 2022. Bank from debit 5,000, commission from credit 5,000.
At the ledger part, we have cash account. On October 10, capital 60,000. On October 16, sales 15,000. On October 29, sales 6,000. On October 12, purchases 15,000. October 14, bank 16,000. October 27, electricity bills 100, and the balance on October 31, 49,900. The total for debit and credit will be 81,000. Next is capital account. On October 10, cash 60,000, and the balance on October 31, 60,000, and the total for debit and credit will be 60,000. For the furniture account, on October 11, Modern Furniture 10,000 and the balance on October 31 10,000. For the total for debit and credit will be 10,000. Next is Modern Furniture account on October 11 Furniture 10,000 and balance on October 31 10,000. The total for debit and credit will be 10,000. Next is Purchases account. On October 12, cash 15,000. On October 13, Vicent & Co. 30,000. And the balance on October 31, 45,000. The total for debit and credit will be 45,000. Next is Vicent & Co. account. On October 21, bank 5,000. On October 13, purchases 30,000 and the balance on October 31, 25,000. The total for debit and credit will be 30,000. Next is bank account. On October 14, cash 16,000. On October 26, Zahir Khan 5,000. On October 13, commission 5,000. On October 19, machinery 6,000. October 21, Vicent & Co. 5,000. October 22, drawing 3,000. October 23, interest 2,000. And October 24, office expenses 10,000. The total for debit and credit will be 26,000. Stationery account. On October 17, Bharat Stationery 1,000 and the balance on October 31 1,000 and the total for debit and credit will be 1,000. Next is Bharat Stationery Mart account. On October 17, stationery 1,000 and the balance on October 31 1,000. The total for debit and credit will be 1,000. For the Zahir Khan account, on October 20, sales return inward 2,000. On October 26, bank 5,000. On October 18, sales 10,000 and the balance on October 31, 3,000 and the total for debit and credit will be 10,000. Next is sales account. On October 16, cash 15,000. October 18, Zahir Khan 10,000. October 29, cash 6,000 and the balance on October 31, 31,000. The total for credit and debit will be 31,000. For the machinery account, on October 19, bank 6,000 and the balance on October 31, 6,000. Total for debit and credit will be 6,000. For sales return inward, on October 20, Zahir Khan 2,000 and the balance on October 31, 2,000. The total for debit and credit will be 2,000. Next is drawing account. On October 22, bank 3,000 and the balance on October 31, 3,000. Total for debit and credit will be 3,000. The next is interest account. On October 23, bank 2,000 and the balance on October 31, 2,000. The total for debit and credit will be 2,000. For the office expenses account, on October 24, bank 10,000 and the balance on October 31, 10,000. The total for debit and credit will be 10,000. The next is electricity bill account. On October 27, cash 100 and the balance on October 31, 100. Total for debit and credit will be 100. The last one is commission account. On October 30, bank 5,000 and the balance on October 31, 5,000. The total for debit and credit will be 5,000.
This is part of trial balance. The purpose of a trial balance is to ensure that all entries made into an organization general ledger are properly balanced. A trial balance lists the ending balance in each general ledger account. The total amount of the debits and credits in each accounting entry are supposed to match. Therefore, if the debit total and credit total on trial balance do not match, this indicates that one or more transactions were recorded in general ledger that were unbalanced. Here I would like to show that our trial balance on the debit and credit side is balanced, which is 132,000 ringgit Malaysia. Next is our company profit and loss statement. The company are managed to get the net loss. This is because our business has a higher expenses than our business sales. So this has made our business experience a net loss which is RM 24,100. The final part in this study case 3 is to prepare the balance sheet statement. To get the amount of working capital, the total of current asset must minus with current liabilities. Then the working capital need to add it with fixed asset to get the same answer, which is 32,900.
Next, we move to the usefulness of the statement of profit and loss. The income statement or profit and loss statement is one of the reports of the financial statements. It shows the company's total sales, total expenses, and total profit or loss for a period. The usefulness of the statement of profit and loss are investors and analysts can use this information to assess the profitability of the company, often combining this information with insights from the other two financial statements. Furthermore, the statement of profit and loss also can prove company's success. Maintaining up-to-date profit and loss statements allows you to demonstrate how your business is doing during the course of its operations, giving you some powerful ammunition when negotiating with potential investors or buyers. The usefulness of the balance sheet statement. A balance sheet is a financial statement that shows the relationship between asset, liabilities, and shareholders' equity of a company at a specific point in time. A balance sheet shows what a company owns and how these assets are financed, either through debt or equity. Furthermore, balance sheets are needed for financial ratios. Business owners use the financial ratios to assess the profitability, solvency, liquidity, and turnover of a company and establish ways to improve the financial health of the company. For conclusion, our group has discovered since carrying out this task that shortcomings include inputs and outputs in business will make it more difficult for owners to grow up the companies. A proper accounting gives more benefits to the business as it helps in evaluating the performance of a business, helps business to be statutory compliant, build business goal setting, and helps to monitor cash flow. Other than that, to help compare the current financial information to historical data.